intuition. We talked a little bit about the frog box. Let me just draw this sketch on here to show you how, because I think this pertains. So when I wrote down all the rules of the owl, I immediately felt good about that because it documented what I had been feeling about the right time to enter that P1, the P1 trade was, right? So by putting those 9 steps in there, the 6 steps, the 6th of which is entry. So you got some kind of price moves like this, and now it's coming up here. And so that's about where if you drew all the other stuff in there, that's about where the owl is going to enter, because you had a significant move down from some measured level, and so we think it could get back to that, right? And then the magnitude of this move is such that we would call that unambiguous. Unambiguous. And then somewhere down in here, you're going to have an RLCO occur, that the 10 has started to curl, at least got flat, and then starting to curl up. To the point where the 30 has just started, it's going to start to do that, right? So somewhere right around in here is where you get that RLCO. So this failure to fail, this little space in here tells me, oh, pretty soon that RLCO is going to happen, and that's going to be step number 2 of the owl pattern, right? Well, in P1, it says as soon as that is occurring, I'm supposed to be entering right around in this area. The owl says, hey, wait a minute, that fails so often that you're better waiting a certain period of time over here for the owl to occur. That now here's the anxiety. Well, I felt, this is where I first felt that maybe this thing is going to go up, and I'm afraid that if I don't enter, I'm going to miss the move that goes back to here. But the longer, or the earlier you precede the owl, the greater the probability of failure, and that this big momentum play is still more likely the right answer, right? So front running the owl is going to make you fail more often, because until you get to the owl, the preponderance of evidence is that this body's in motion will stay in motion. So this first little deviation where it didn't fail, okay, that's just a feeling, and I can call that, hey, I'm still just about, was that a big, if it turns out that was the low, was this an unambiguous move? Was this large enough to say that the owl is a possibility? That's the only piece of cognitive processing I have to do. The second one is when, the RLCO happens here at point number 2. In the P1, that's the P1 signal. Even that one fails so often that we learned over time that if you just wait for this thing to get to the 6 o'clock position and start to arc up, that's actually a better thing. And so now step number 3 is that the dragon has come down here, and now the RL10 has come through the dragon. So now step number 3. Well, still, just recognize this whole thing. This is all time that I've actually been, because I've had things to look at and checklists to check and reasons to wait, all of these little pieces and particles and rules are things that allow me to not act on the urge to immediately get in because I'm afraid that I'm going to miss the move to go all the way up here. It's like it's delayed gratification, or it's impulse control is what these little steps in the process are. So step 3 was the 10 got through the dragon. Step 4, I think, if I recall correctly, is the dragon turns up. Yeah, so now the dragon has started to roll. I should make that orange, I suppose. So step 4 is the dragon has rolled up. And then step 5, the 30 has rolled up. So now so step 5 is in place, step 4 is in place, and now the price has rolled up, and now I can get in, and there we go. Well, in a perfectly orderly world, that stuff happens just like clockwork according to the beat of a drum, right? And whatever the swing low was, once you know the owl pattern, there will be enough times when it doesn't go so exactly by the numbers that maybe the next move was so strong that the big move has already occurred before all this other stuff finally came around. So then we will remember that and then give that too much weight and say, oh, I should start front running the owl. So here's all I do to answer that question. I'm going to be a deliberate owl trader, and the only thing that I'm going to allow to overrule it is this stupid frog box.
Uh-huh.
No matter what, whatever the low of this freaking day was, no matter what's all happening in this owl stuff in here, I just know that any move that's a frog box off the bottom, off the low of the day, that's a perfectly reasonable place to enter because of the range stat, I've got these 2 reward to risk. So all this horsing around in here, all this scribbling noise and rules and anxiety and all that other shit, first gets unpacked by the steps in the owl. Step 1, then step 2, condition 3, condition 4, condition 5. Okay, now I buy a candle breakout on my entry is step 6, and my stop is at the Z2 or below the swing low of the 10. And then I manage the stop in a certain way, and I mark it up, and I get to no lose plus dinner for 2 and all that shit. Those 8 or 9 steps are simply a structured way. It's like the baseball player fiddling with his belt, although in this case we can objectively assign those steps to indicators that more than one person can see, and so those allow me to lessen all the anxiety of this stress that's generated in here. And then the frog box is simply a way to say that for those few times in which the price moved up here before all of those steps were engaged, if I just put a frog box lid on this mess and just say, look, if at any time prior to all the steps in the owl firing correctly, if price moves a frog box off the low, I'm just going to enter it, or I'm going to say, stop, I'm not going to enter it because it was not an orderly owl. You got to make that decision. Personally, if it's a frog box off the bottom and moving, I just take it and hold my nose and say, let's see what happens. How soon, if I take it right now, how soon can I take my my stop down here and get to no lose plus dinner for 2? And as soon as I can do that, it doesn't fucking matter. Yeah. I'm not going to lose any money on that trade. And then let it do what it's going to do. And this move right here from the measured stop to the no lose plus dinner for 2 removes all my issues and anxiety and angst that I do that. Well, no matter what I did, I'm not losing any money on that trade. Huge feeling of relief. And now I can manage the rest of the trade comfortable knowing that I avoided death for at least this trade. Right? And that's all it is. This moment of relief is so great that I am now free to manage this like a human instead of a goddamn chimp. Mm-hmm. That's the banana. There's your banana, chimp. Shut up. Leave me alone. Stop trying to front run this thing too early. But in fact, what I've really done is that I've said that under orderly and normal conditions, I can afford to wait for the owl to occur. I meant to draw that in red. Excuse me. Yeah, red and a pen. That I'm waiting for the owl to occur. So once I get the first urge, when this thing is no longer failing, but it started to flatten out, and in this whole period of time in here, anxiety is building until the owl finally gives me permission to enter. So I'm only worried about this this period of time in which there is anxiety, hurry up and get in so that you don't miss the move back up there. My rational mind says, well, most of the time it doesn't do that, so just wait for the owl and don't dwell on the ones that you don't get. But my chimpanzee rat brain, which doesn't understand statistics, fixates on those things. It only remembers the times when the rule set didn't work. And so that's why I'm encouraged by my chimp to do things in here. So as a way to put a lid on all that, I just say, look it, if there's something that happens before all of the owl and it causes price to move off the bottom like in a frog box, well, I know how to enter that, so I'm not going to worry about all those urges. Because all the little false moves here that occur, but before it hits a frog box, that's my no thinking threshold to act. That allows me to not act improperly on all those urges. And I could say, well, I know you want to go. If it goes through a frog box, I'm going to enter. Otherwise, you help me count off these 9 steps of the frog. And oh, by the way, if it fails below, it makes a new low of the day, we're going to be short anyway. Why? Because this first big unambiguous move down, it flirted with reversal, and it didn't, and it just made a new low, so automatically we're in. That's P1F. Mm-hmm. So the whole idea behind, now let's back up even further. The whole idea behind the hybrid frog is that from the moment of the open, if this thing just keeps moving down and we're thinking, oh, the rest of the market is up and it's a bull market and this is really the unambiguous move that's going to go up there, the hybrid frog is nothing more than just saying, look, I'm going to put a mark on the ground that if this thing fails any further than that, before it even gets me into this owl, I'm just going to go short from here. And then I'm going to exit not later than an owl entry. Or how soon can I get to no lose and dinner for 2 on the hybrid frog? And then I'm exactly in the same condition as I am over in here. It says, I got my risk capital out of there. Let's just see how far it goes. So that's why I call this a chain trade. Because all we've done is we've said from the moment of the open, I'm using a hybrid frog to just say, if it fails this far from the open, I'm just going to get in and hold my nose. And as soon as I can get to no lose plus dinner for 2, boom, I've got my risk out of there. Then as this thing starts curling around, instead of continuing the way I want it to, I can say, look, here's where I'm going to get in on the owl in this period of time when I see those steps 1 through 6. Then 7 through 9 are how I manage the exit, right? And so the RLCO happens here. It crosses the dragon there. The dragon is rolling up, and now the 90 is rolled up. There's my owl entry. But if I'm worried about this thing taking off and just going, I can say, let me put a frog box from the low, and now if this thing accelerates out of here before it even gets to the owl, well, quite often those are the ones that can actually move. So I'm going to get in here. But if all this stuff fails and makes a new low of the day here, then that's the P1F. So I have a hybrid frog going south. I have a tentative owl going north. If this thing fails, it becomes P1F. And if this thing goes early, it's a frog box off the bottom. So in this whole period of angst, one of 4 things is going to happen. It either immediately reverses before the owl happens and I'm long, or it fails again and I'm short with the P1F, or it turns into an owl and I manage it in the owl way, or the 4th thing, it comes down in here, instead of rocketing or owling or failing, it just does this and stays inside this narrow compression channel, and at some point that's going to be a Z3. I'm going to get a Z3 pinch if it just stays sideways for a long period of time. So those are my 5 plays, right? That's the pattern that's in my head and how I'm just responding to the hydraulic pressure of price as it moves. And so, that's about as precise as I can be on it. It's the whole series of it says there's enough times, 2 times out of 5, the opening was in the high or the low of the day. Well, there's the opening and it's failing. 40% of the time, this was the big move, and this turns out to be the high of the day or in the top 10%. So the huge move was this.
Yeah.
So that's the hybrid frog takes care of that. But 3/5 of the time, 3 out of 5 times, that's not the case. It's going to turn around and do some of that shit. Right? And that's the owl. And how far can that move? I find the low of the day, put a range stat on it. That's what it can do. If it moves that far off the low, I can frog box it. And meanwhile, I can refine it with an owl inside here. But if it just comes up here and then keeps failing for a second leg, oh, it must be a range stat from the open. And so that's a P1F. And so by having enough of these little signals and little checklists, you can use those as a step-by-step process to manage the feelings and intuitions in the chimpanzee and turn this into objective, measurable, observable, analytical behavior and decide which ones are working for you. Where is it manageable? Maybe the hybrid frog is just not manageable for you. Say, look, I'm going to simply wait and I'm only going to take the owls. That's a perfectly reasonable thing to do, and say, I'm not going to worry about those other ones. It depends on whether your chimp will let you live with that decision.
Yeah. And I've noticed,
Go ahead.
I've noticed enough time, all right, for, like this past week, first of all, I spent a lot of time thinking about, like, getting myself psychologically away from this kind of, I guess maybe it's a form of perfectionism, I don't know. But this rigid thinking where, or just to use an analogy, it's like, let's say I get paid to fly a plane back and forth from the East Coast to the West Coast, and that's how I feed my family. Yep. And then I look over there and I say, oh, well, my pilot friend Ken Long over here, he's got his F-16, and he flies back and forth in 3 hours, and he's doing all sorts of rolls and dips and all that. And wow, I should be able to do that. I know what he's doing. He's explained what he's doing. Well, I understand exactly what he's doing, so I'm going to try to do it. And then I crash enough times. I'm like, well, yeah, one day I would like to be able to do that. But I got to remember that the most important thing is putting food on the table by flying back and forth in a somewhat safe manner. So for me, like this past week, I was like, you know what? Screw all of this, almost approaching it like an academic exercise where I'm like, okay, here's all of our different patterns, all of our systems, all of the stuff we do. And so I should be able to do all these things on the 1 minutes and everything. And forget about what the actual performance stats come out as. If I just say to myself, if I look back on the last few years, when am I able to stay in the blue circle? Forget about an up day, down day, whatever. When am I able to stay in the neighborhood of the blue circle? Yep. And when am I completely out of the blue circle? And it's very, very, very simple. When I trade 3-minute bars with owl, P1 fail, collapsing dragon,
yep,
I can stay in the blue circle. Maybe I think I should be able to do more than that, but you know what? The data says something else. And moreover, if I'm tracking, of the 2 pages of the, my master target list is probably around 40 things or so. But like, yep, I did the same thing Martin's done, where like I can see a little green dot or a red dot that says, hey, this either, this one over here. I'm not looking at, I wasn't looking at Bristol Myers, but oh, wait a minute, the 3-minute bar is outside of Z2. Bing, it just tells me that. Or both the 10 and the 30 are outside of Z2, which gives you a long lead time leading into a P1 and an owl.
Yeah. Uh-huh.
And just those few little things are going to give me plenty of opportunities to average 1 hour per day.
Yep.
and looking back and saying, oh, well, wait a minute. If I had been all over 4 different hybrid frogs around the open using 1-minute bars, I could make 2 hour a day. And you're like, well, yeah, but I'd probably be, as a pilot, I'd probably be in an exploding ball halfway across the country. So I don't know. Like Friday, I just went in and I was like, look, I'm back to 3-minute bars. I'm waiting for these things to happen. They usually happen, and I have added in, 10 o'clock, the quick frog, which is exactly what you were just talking about there. It's like, okay, things don't line up perfectly. Fine, you have a quick frog, and sometimes it, and like you said, once you're in and your dinner no lose for 2, dinner for 2, whatever, like, doesn't matter what, whether it was a frog or a owl. So I'm kind of, I'm back to that, and then, and then another thing, and here's back to my, like, really, trying to get away from the super rigid, straitjacket thinking, where, like, I'm not really trading Z3 POs these days. I don't know. First of all, I don't need them to make one on. I don't need to do that. And however, Friday afternoon, EWZ on the 3 minutes went into such a tight squeeze that the risk reward was incredibly attractive. I took a Z3PO and it was a great trade. And so it's like, and the old me would have walked down the sidewalk after that being like, well, do I trade Z3POs or do I not trade?
Yeah.
What was going on? What, do I trade them or do I not? It's like, just relax a little bit.
Hey, sometimes you find money on the ground. Well, should I stop working and then only look for money on the ground?
Yeah.
Or should I say, no, I'm going to not commit my life to looking for money on the ground. And so even if I see it on the ground, I'm not going to take it.
Yeah, exactly.
No,
exactly.
I don't do that. I just,
I'm not looking for Z3POs, but when something's at like 30% of a frog box and it made a big leg down and it's 3:00 p.m. when things are going to make the final move, it's like it's $1 away from the VWAP. Yes, exactly.
Or some shit like that. It's like, Christ Almighty, I get it. I get it. Okay, I see it. And it forces you. It forces you into violating your rules almost. It's like, all right. And that's to me, that's what Mark Dow and I used to call that ready, fire, aim. It's just like, well, shit, okay.
Right, exactly.
Yeah, and so I look for this kind of formation all the time right here. It's get this, there's some move down here, if the open was way up here and I hang a range stat way down here, I know that if this thing were to fail on this thing, it could get this far on a range stat, so I get all of this room to play with, right? It's like, so I'll take that as a collapsing dragon all day for no other reason other than the fact that fear works. I mean, I take that no matter what. And so I actually try to say, look, if the move of the day was really down, slope of the river, and it has this little thing, this little bump, and the Bollinger Band mean is here, instead of just trying to wait, that's the collapsing dragon entry, maybe I can get it somewhere in here, and then that first move out of the collapsing dragon is so big, I can quickly get to no lose. I love that. Yeah. And then if that fails, maybe I tried it, and right after it doesn't work, I can think about, well, let me just scratch it here. And then this is where the emerging dragon is going to be. Maybe the move of the day was up. And so, this looks like an emerging dragon opportunity, right? In fact, this one, when it failed, it was going to go back to the VWAP. But no, it didn't. It did this, rolled, comes down here. I think, well, maybe this is where I could think about getting long in here. This thing failed. It failed to fail, so it rolled over. This is where I would have scratched my short. I know I'm going to get long at this point when it gets above the hump of the dragon. So this little space in here, maybe there's some way I can get a little improvement. And then maybe I can enter right here, and then this is my stop. I put a hybrid frog box on it or something. Then this thing takes off and it goes. So just little variations like that. Just make it very easy visually to just, and that's where maybe intuition comes in. But it really just comes down to these little, this previous hump was right here, or the belly, and this was the previous hump, and that sets up this yellow zone. This is the, if I'm going to try to front run, it's always going to be in here. But if it falls out of this, then I'm short right here, not later than. But if it comes out of this stuff and starts to go north, then I want to be long, not later than here, or that's where I'll just mechanically get in. So now, based on what else is going on, this is my discretionary zone in this space formed by the channel. So now the idea of the Z3 is that if this channel that's formed inside here is less than a frog box, well, shit, I can get long here and then use a frog box stop. And look, that turns out to be a hybrid frog, because this was a full frog box, and this is the size of the actual channel. So if I get long here with the stop at the, even if it comes down and hits this, it's only minus 0.7. But even if I get long here and it fails and it comes out of the channel, that's my stop and reverse point. So that failure is going to be about minus 0.4. So I don't worry about that shit too much. That's sort of my, once the day is over, this is kind of the opening of the day, this little standard playbook. You know, the first scripted 10 plays, like the Patriots, whatever they do, you know, they got their first 10 or 20 plays already prepared. They know what they're going to call. And that's just based on these basic 5 patterns. You know, the hybrid frog, P1F, frog box if it rockets north, or it gets me into an owl, or that could go to P1F too, quite often. Or sideways quiet channel. All based off of the range stat, the frog box, and the hybrid frog calculation, which is all just stats. That's math, right? And then this other thing is just because I've seen it happen so reliably, this collapsing dragon, I would just take that one by default, and it just, no matter what, because it's against the optimists. All the optimists try to push it up top, and it made they couldn't even hold on here. It's like this last time it was going down, and they started buying it enough that it turned around right here, and that turned out to be the turning point. When that fails, that means all of the guys who were invested emotionally and financially in trying to make that the up move, all of those guys failed. And so now the buy side is even weaker. And that's why this thing can fail so easily, is because all these guys that tried to make it stop falling, they failed, and they couldn't hold it here. So that means whatever the size of this move was, that this size move, whatever this leg was that terminated here, that's how big this next move will be. Because all the guys who won, all the guys that are selling it, are still selling it and pushing it down.
Yeah.
There
was one thing you said.
Yeah. Go ahead.
Yeah. A few months ago, you said something that I hadn't thought about, but that it's exactly that. That, like, if you're taking a P1 fail, that's, you know, it's also a collapsing dragon, maybe.
Oh yeah.
The higher it gets towards the Bollinger Band mean before it fails, the better.
Yes.
Because of those additional buyers that are now screwed.
Right, because all the guys,
it's actually a better,
because the better that first leg is, all those guys now get to be comfortable that they locked one in. So when they start cashing their winning positions, they're actually supporting the short side. Right?
Yeah, yeah.
So when this thing comes down and starts to hook back up and the Bollinger Band mean is here, if this thing fails immediately, it's easy. You don't even have time to front run that. You just get short. But if this thing gets all the way up here and then, just starts failing, hey, that's what we'd have taken that as a 1R for a P1. And now this thing starts failing. All the guys that made money in here are ready to start selling it because they want to lock in their profit. So this thing starts rocketing down easy. That's easy money. And then if all the guys that bought it here and were the ones that caused it to go up here, if they can't hold it here, that means the sell side just got stronger, and when it falls through that resistance or that support level, that first move is huge. So that's why I try to get short inside here, so that I'm not chasing this huge move. Until it kind of gets to the Bollinger Band mean, this is just a noise move. That's the first mouse. It has to get above that, hold, and then start to go, oh, that's good. Now I have this. Yeah. And off it goes. That's P4. Or not, I'm sorry, P3. Held support as P2 or P3. Yeah. P2 is held support at the Bollinger Band mean and takes off. If that thing got all the way through the river and held support on the north side of the river and takes off, that's P3. That's huge. Because it didn't even come back into the noise zone before it started to resume. P3 is pretty rare, but it's powerful. So that's quite enough off of all that shit stuff. Go ahead.
One other psychological thing, you know, away from stats and all that, like one other psychological thing that I don't know, just for me personally, that it's been helping me. And again, it hasn't showed up in my stats yet, but it's helping me keep a better frame of mind. Is thinking, okay, let's say I do 200 trades a month, right? You know, one trade, one loser, whether it's a great trade that's a loser or a mistake that's a loser, like the consequence of letting one loser cascade into another loser and then another one, that's the risk. One loser doesn't mean anything. So I don't know. I just have a thing on my desk right now that just says 200 trades a month, and it's like the amount of emotional massacre, you know, the amount of emotional just damage that I inflict on myself for one trade. It's like if you multiplied that by 200, I'd be dead. Yep. So, you know, just like it's like an athlete. Like you put up an air ball, like just go to the other end of the floor and keep going, and don't let that don't let that snowball.
Yeah, like this was said before earlier this month on that 50-50 coin flip. If you do that 200 times, there is a 99.5% certainty that there's going to be 8 heads or 8 tails in a row. Yeah, you can fucking guarantee it. Not just, oh, that was unusual. I got that. No. If it didn't happen, you'd wonder what the hell happened. If you didn't see 8 in a row losers, you would come back and you would say, this coin is not 50-50. Something weird is going on. And if 8 in a row shouldn't surprise you, then one loser is even less reason. I mean, it's like, dude, you got to get over that.
Yeah. Yeah. So if I'm emotionally
reacting, it has to be thick. Here's how thick your skin's got to be. So give yourself a break. Yeah. Now, I'm not saying you got to be able to have a thick enough skin to tolerate a loss. You have to have a skin thick enough to tolerate 8 in a row. Oh, it's got to be more than that. Because if there's a mathematical certainty, close enough, 99.5, that you're going to get 8 in a row out of 200, your skin better be about 15.
Yeah.
It's not quite 15. It's something less than that. It turns out that if you take this out to 50,000,
yeah,
you're going to see 18 in a row. Not 8, 18. So you don't got to wait for 18 in a row. And at 8 in a row, I'd be worried. Yeah.
But for somebody like you, where your TQN is so much of your performance, when's the last time you had 8 in a row losers?
I've had them this month.
Oh, eight
Yeah.
in a row? But they're all like, yeah.
Yeah, or I look at 8 in a row as like 8 out of 10 or even some shit like that, where I've just had, and it's always been a case where I had too many positions on at one time. Like this was happening, and so I put that one on and that one on and that one on and that one on, and it turns out that they're all correlated. And so when they all fail, they all fucking fail. Right?
Yeah.
There it is.
Yeah.
And so anymore, I just kind of get one, and then I try to get a second one on. Another trade, and then I try to get 2 positions on in one. To combat that urge to trade more things. And so, I mean, I look at EWW, EWZ, the VIX pair, WIN, IWM, and then based on, 1 or 2 other ones based on swing trade patterns or things that I'm holding overnight or something like that. But if any of those are working early, I just feel like, hey, that's enough for me today. I don't even have to worry about these other things down there. And then somewhere, like going into lunchtime, I'm looking at there's this morning trade session, and then there's this lunch period when things are super, super quiet. In this little intervening period, that's where if I was busy with those, like if I got everything I needed out of those for the day, and then those are done, that's where I'm starting to scan around to see what looks like it might be interesting going into the lunch period. And then when I get that Z3P pinch and I start looking for things starting to emerge, that's where I end up doing those Z3Ps. Yeah. And then there's a whole big afternoon, a 2-hour afternoon session. And usually that's maybe 1 or 2 symbols for me. I'm not trying to get all 4 going, because I look at this as guys are just only the truly exceptional big stories of the day are going to continue that morning move in here. The morning move was going to be huge, and then the afternoon move after the lunch period is either going to be it's going to be half of whatever that was and retrace, so that the residual move was only this normal piece, or it's going to be whatever this size move was, it's going to be another half or another full one after lunch. And then that's going to be that'll be one that gets everybody's attention. But yeah, maybe, like 4 symbols up in this session. And usually comes 3 out of those 4 are going to come out of there. And then just a couple there. Yeah. But just staying with them. And again, I try to remember that thick skin, just say, as long as I'm aiming for these, for me, that's a plus 0.7 win emotionally.
Yeah.
And so a 0.3 win feels like a full 1 hour win. Yeah. It feels like I got over on them because I got a sandwich at least. Okay, that's probably enough. There's some basketball to watch. Let me open it up for any closing remarks from the boys. Charles and Dave and Martin, if you're still with us, anything grab you? Any closing remarks or anything?
No, thanks for that.
All of the things I was talking about there about the intraday patterns, that's the same thing with the RLCO framework for the swing trade patterns. And I'm finding that when you do the mechanical swing signals and then add that RLCO Bollinger Band framework on top of it to micromanage the trades afterwards, it really helps with the management of those trades. Let me give you, as a going away present, but just, I was going to go through a bunch of those quizzes, but I'm going to record that separately, so you guys have hung in there pretty well. I'll just see if I can find it. EWZ, I think. Yeah, this was EWZ earlier in the month. I had done 3. These are daily bars. Yeah, so this is daily bars, and so we can see that the trend is up. But I see this, and the dragon is riding the north shore of the river. But I also notice this baby dragon is doing this little gizmo. And so it has terminated now. So I'm ready. I see that as 2 legs up. Here's the first leg up. It paused. It held support at the edge of the river. Here's the second leg up. It moved up to this high. But this time it didn't hold at the edge of the river. It tried, but it actually penetrated the river, and now it's got this little leg here. So in my view, this is a weakening condition. Do you guys see that?
Yep.
So I now look at this and say, well, maybe this, if I looked another higher time, maybe this is all just one move. It pushed this far above the Bollinger Band mean, and now it came all the way back to the Bollinger Band mean. But look, if this is still higher than it was down here, so this long side trend is still intact. The first price that I'm willing to say that maybe there's not a second leg up like this is if it were to violate this, the previous belly of the dragon. Check or hold. We good on that?
Check.
So I look at this now as here's a 1, 2, 3, but it closed weakly. It had a very weak close. So I'm now I think I can make a perfectly strong argument for a trade in both directions. So let's see what that looks like. We'll zoom in a little bit so you can see. So I say if price, I'm going to call this the yellow zone. I'm going to take the top of the dragon skin, and which is also the skin of the north shore of the river. And I'm saying if it can get out of there and breaks through, I'll take it long. And then the first place that I think that it fails is here at 40 1/4. So if I were to get long at 39 1/4, would I be willing to cash a win of $1? Yes, I would. I'm willing to aim, because I know that if it gets north of that, it could really go. So if I get long here, here's at least 2 places I could, if I used a 2-day low and treated that as my initial stop, that's actually the first place that I want to get short, because I want to get short before it violates this red line. And so the red line is actually where I want to get a second position on, because I think if that fails, it's not just going to 36 for $1, it's going to 35.50 to test what I think is this support level over here. The soonest I could actually get short is if it opened inside yesterday's range and then started going south. I could actually get short. And then if I got short here, I wouldn't take this one because it's too close. But I would take my second entry here. But if it gaps down, I'd be willing to get short at 37.75 and then add a second position here with the idea that it was going to go rapidly down here. So that's what it looks on daily charts. We good on that trade frame? As long as it's inside here, it has not communicated directionally to me on a daily chart. Now intraday, this is from 37.75 to 39 1/4. That's $1.50. That's $1.50 inside here. And my normal size of a stop is 25 cents on EWZ intraday. So there's really 7 or 8 steps of 25 cents inside. So I can day trade this in this range, but I'm not going to commit to a swing trade on it. You see the difference? Is that making sense?
Yeah.
Okay.
Yep.
So in a nutshell then, what happens when I, the next day, on the 7th of, I now start managing this thing on, well, this is what that trade frame looks like, using daily charts, excuse me. So this was the 6th that we set it up. This was the 1, 2, 3. This was the 1, 2, 3. And then it broke below that previous day's low, so I got short. The next day was a gap down. It got down below here. It immediately sold off and then closed weekly. The next day it opened, had a little bump, and then failed sharply. And at the blue line, I looked at this and said, well, the market's been up for 3 months since Trump got elected, and here I am holding a price at 36. I got short at 38. I made $2 in 2 days on a $1 risk. I'm going to cash that. If I hadn't cashed here, I would have cashed at the open and saved, and I would have gotten $1 on a $1 risk. But knowing the size of the gap stat, and because I had 2 in hand, I just decided to take that. So this was actually getting short just south of the Bollinger Band mean and cashing one at Z2. So a Z2 exit to me on that one is perfectly supportable. Now, if we're in a market environment in which the follow-through is not really there, we could actually take this now as, if we go now to EWZ with 30-minute, this is 30-minute bars. I cut that off so you could see. Now, using just 30-minute bars, which gives you plenty of time to think about things, here's where that got short. This was the previous day's low, and this one just rolled over and collapsed, so getting short here with a stop up here at above Z2. So let's call that 38.75 even. Getting short at 38 even, so it's 0.75 at risk. The next day, gap down. And here's the way I look at that one. I said, because I'm already short here, and it gapped down to really about 37.25, that was like a 1-hour gap in my favor. I'm not going to lose money on this trade, I swear. It sold off hard the rest of the day and started to recover. I got no problem if you took that one on a swing trade at 36.50. There's nothing wrong with this exit. It's a Z3. It rode Z3 all the way down and then started to recover. So even if you took it here, that's a good exit. Now, the rest of the day closed weekly. The next day, this piece sold off, and now we're down at 36.25 and closed weekly. This was that with 30-minute bars, you can afford a 75-cent stop. And look, you went from 38 to 36.25. That's $1.75. In 2 days, you made 2.5 R. Is that a pretty good swing trade? I think it is. You're already better than your objective 2-to-1 reward to risk ratio, and you got short. You got 2 R short in a market that was going up. So that's one where you could say bird in the hand's worth 2 in the bush. But if you didn't and you saw this gap against you, you would say, well, I'll take that one then. And I've given back this much, and I would still settle for, that's about 1.3 R. Even if you took the overnight risk and then lost and gave back that much, you still got about 1.3. So to me, all we've done here is we took what was a It was like a 5DD or a 551W, I think it was. It was a 551W. And then we just applied some market context and the Bollinger Band framework, and we just drilled down to the 30-minute window, and we got a much improved exit. In fact, there were even places intraday that you could find ways to add with intraday size in here, but you didn't have to. You could still come out of this with 2.5R without trying to do any additional piling on with intraday, adding turbo. So when the market itself is not favorable for swing trading, and that's where I really like the work that you started on adding components of market profile and market condition to position sizing. But we can still use this RLCO framework and those mechanical systems to give us insight about direction and opportunities, right? So EWZ was a good target because the daily chart swing trade pattern had fired. And then we found a way to get even more movement by using the intraday. And I'm only using 30-minute candles on that one, so it's not like this is day trading running away, running crazy. So that's the point that I want to make about the connection between day trading and swing trading, and that's going to be one of the things that I talk about in the advanced swing trading course that's already recorded. But when I do this other one, I'm going to be doing, it's really kind of the same thing, and that is that the swing trade basket of trades, and then there's the day trading baskets, that this space in between, I really see this as an overlap between swing trading and day trading. So you get day trading and swing trading. There is this area of overlapping interest where sometimes good intraday candidates do so well, you can keep a piece and try to turn it into a swing trade. And then there's some cases where the swing trade, you can dial down and look at the intraday stuff, and they become really good day trading candidates. So the area of commonality and interest between swing trading and day trading, to me, is using 2-hour all the way down to like 30-minute charts. This is where it's just a hybrid of swing and day trading. So I'm using daily and weekly charts for swing trading. I'm using, 1 minute to 10-minute, if you will, for day trading. This little hybrid space in here where I'm using 2-hour and 30 minutes, those kinds of time frames and charts, allows you to get the best of both worlds, in my view. So I would just draw that to your attention too. Okay?
Yeah, thanks. Yep.
That's everything I wanted to cover for today. So let me bid you guys a good day, and I'll get this processed and hung on YouTube and shoot it out to you. And with your permission, I'd like to share with a few other folks that are going through coaching and the folks in the chat room. There may be some pieces that are useful to them. I may just cut out, I at least this last little piece in the lecture series I may just cut out those pieces and make them separate presentations too. So, but I appreciate your letting the other folks learn off of us too. It all helps. So we'll take good care, and we'll root for South Carolina tonight. And yeah, we'll take good care. See you guys.
Thanks. Bye.
Got it, Martin. Yeah, the time frames. I'm gonna do some explicit lessons on that. Some of them are buried inside the advanced swing trade, but I want to make a separate standalone lesson on that because I think it's pretty important. Anyway, take good care, guys.